Hey guys, so in this video we are going to go over false breakouts and manipulation. I've talked about this in the course before, but I still want to go over some examples. Okay, so what I'm going to do is we're going to talk about like where inexperienced traders are taking the trade and where the pro traders are taking the trade. So again, the biggest thing is that you need to have experience with the markets and recognize like different types of scenarios and stuff like that. So that's why I highly recommend that you focus on 2 to 3 pairs, because then you can completely perfect it and you can analyze everything that's happening rather than looking at 10 to 20 different pairs and forgetting your setups, forgetting the opportunities, because there's just so much like info that you're watching that it just becomes too hectic. So that's why I really recommend you study 2 to 3 pairs and then go from there. So for example, on this, we're looking at the 4-hour on Euro NZD. So we have the high coming up here. We ended up creating an M pattern, okay? So let's say you took a sell. Oops, let me get the arrow. Let's say you took a sell at the top here, which is completely fine, okay? So what's happening here is we had a massive impulse to the upside, then we have 2 hits on resistance, and then we create our M pattern. After the M pattern creates and we have that impulse leg, it ends up reversing, okay? So when people are looking to get in, they're thinking, okay, so this is what comes in handy with the horizontal ray. So you want to identify the level of where it's rejecting, okay? So this is around 81,600. So that's what we would mark up. Just because you put a sell limit, or if you manually enter at 81,600, that does not mean it's going to respect it. It's going to manipulate it a bit to try and entice buyers to go into the market, okay? So this is a perfect example of a false breakout. So let's say you entered a sell here. So in between this zone would be around 81.9 to 81.6, okay? So that's 30 pips difference. So anywhere in this zone, and when we look on the 30-minute or the 15-minute, we can see any rejection around this zone to take an entry, okay? So taking an entry here is completely fine, and then putting your stop loss right above structure as soon as we can see that it's closing below. What we can do is take a sell, okay? So you just got to analyze what's happening here. So we had a breakout at this point of structure, and we didn't have a retest. So it came up to this high, respected what's going on the left, and then ended up rejecting it, hit twice, and then came down. Then we had a pin bar rejection telling us, okay, this is staying above the specific price and we could move higher. So this was about 185 pips, okay? So you're watching it from each level, and I've explained this many, many times, okay? So if, in fact, it doesn't end up breaking this level, then it could go up and touch the high again, okay? So this is an example of a false breakout, okay? So basically what happens is the market entices buyers to go in the market, and then the market makers end up taking profit and making extra money. So buyers will think, okay, the market's breaking, and then they'll start buying, okay? So they'll put a long position, let's say here, after the bullish candle, and then they'll put their stop loss, let's say, right below structure. Or sometimes they'll think, okay, the market's going to continue up, and so they'll enter here. Even if they enter here and then put their stop loss below here, it's still like the same thing. So it's like they're watching for this to break. So what ends up happening is, like I said, most people, if they miss this buy at the bottom, they'll start buying up here and putting their stop loss below. Okay, so the thing is that it's at major structure, and I'm going to show you the full example on the left hand or on the right hand side here, but it ends up breaking, but then it's going to exhaust. And so if we look here, we can see a bullish candle, indecision, and then it starts to reverse. Then it breaks below, touches that zone, and then continues down. So buyers are screwed because of the fact that they think, oh, okay, there's a strong bullish candle, I'm going to buy, and they start adding so many positions. So then out of it, they make about 30 pips, and then the market reverses. And they're like, okay, it's just coming down for a retest. Well, the thing is that the candlestick is closing below 181.6, right? So it's closing below, there's no retest. If it was a retest, it would look something like this. It would come down, wick at this price, and then it would continue up like this. That's what it would look like with the wick. One second, let me make that bigger. Okay, so it would come down, wick at that price, and then like make a pin bar or something saying that it's going to reverse. But since we're at major resistance, it ends up faking out. So that's what you have to be careful of when it arrives at this resistance level. You need to be taking consideration that there will be manipulation. Okay, so then what happens is, if you're experienced, and like I said, you need so much experience with the markets, and you need to go through all of this. That's why a demo account is really, really important, because you can practice all of these things. You can practice your entries and stuff like that. The biggest problem people have is their entries, and that's just because it takes a while to understand and also just to have experience, like I said. So what ends up happening, this is a fake out, and then after the fake out, it closes. So this would be our sell entry right here. And again, we can take it at that 181.6 or 181.7. So let's just say we take it at the 181.6. Okay, and our stop loss is going to be right above. So like I said, like 30, I do like 30 to 40 pips just right above here, because this is a false breakout. It tested once, twice, then closed more than likely. Again, you could put a smaller stop loss if you want, but all the videos I've talked to you about, I like to keep it a little bit bigger just in case we get manipulation wick. The worst thing is getting stopped out and then having to enter again and it going in the right direction, right? And we have confluence here, so don't stress about your stop loss. So again, our first target's here. More than likely it's going to break because this is minor structure. So then it ends up exhausting here, but then ends up closing. So we move it to this target. Ends up completely breaking, testing, and continuing down. Then we move it to this target right here, okay? So then it completely breaks, retests the structure, and then continues even lower. So what we're looking at is the next level, okay? Which is right here. Okay? So again, I actually talked about this example in one of the videos that I just did, but this is just, again, I'm just going through it and I'm going over the fake breakout example. So that's fake breakout number one, okay? So number two is we have rejection in this area, okay? So it comes up to this price and starts rejecting. So again, this price was around let's say 900. Let's move it a little bit closer, actually. Let's do 850. Okay, so 850 to 78,150. Okay, so that's about 30 pips. So most examples that we have when we're looking to enter is usually 20 to 30 pips, okay? So these are really good examples. So this zone to here above the candlesticks is about 30 pips, okay? So it comes to this level, we have a massive impulse to the upside, so impulse, correction, impulse, and then it comes to this, it ends up rejecting and closing below that price, and then it starts dropping, okay? So then now what we have is we have rejection in this area. So then what ends up happening, comes down, then respects and comes to the highs again, okay? So it ends up reaching this high that we have here. So it ends up wicking at it, tries to break above, and then comes below, tests one more time, close below, and then ends up dropping, okay? So that's another example of how it tried to entice buyers to get in the market, then it completely reversed, tried again, and then completely reversed down to this low. Okay, so then another example is we have a rejection here. It tried to false breakout, then ended up closing, testing, and going up to the high one more time. Okay, so then same example with here. Okay, so ends up coming to the high. People are like, okay, it rejected in this level. I'm going to start selling. They try to entice buyers in the market. So the buyers get in and then it completely reverses on them. Okay, so here's another false breakout, closes below, test, range for a bit, and then continues to drop. Then what ends up happening is it goes up further to structure, right? Because this level has been tested so many times, so it eventually is going to break. So then the reason why it comes up here is because this was once structure, so it came down, respected right here, like we talked about previously, pin bar rejection up to the high again. So this completely broke without no retest, right? So then we're just going to drag it across. And the reason why it came up to here is because of the fact that it's retesting the structure. So it comes up, huge bullish push, and then it ends up correcting itself again down to this low. Okay, tries to break below, ends up coming up, and then tries to break above. This is a perfect example of a fake out as well. So they're enticing buyers. Buyers are going to get in. Then it ends up closing below because we're at this major structure. Tested once. So broke, no retest. Tested once, twice, fake out. Also, look, we have a huge bullish push. We're not going to keep going up and up and up. It needs to correct itself. Like it went up around 350 pips, so it needs to correct itself, right? So it tries to break out. I actually caught this trade. It tries to break out, then ends up closing right here in this zone is where we could take a sell position, and then just dropping down on lower time frames, we can get that precise entry. So this could have been a small stop loss in this sense, because even if you missed it after this pin bar, we could get it at this retest of structure, so around 79,800. We could put our stop loss right above here, and then again our targets to the low. Okay, so these are multiple examples of fake outs. Okay, so let me just redraw this again. Okay, so we have one, two, three, four. Okay, so you can use these as your advantage. Just don't get caught in the wrong trend, obviously, right? But again, like these are just prime examples of how you have to wait for that retest if you were to buy. Like, for example, like coming up to major structure, and another thing you have to think about is the impulses and corrections. So they're so freaking important. Once you have an impulse, it always comes to correct. Then once it corrects, it always comes to an impulse, and so on and so on. It literally repeats itself. So these are things you can take advantage of. For example, let's say you miss this whole sell and it's coming to a support level and you can see that it's faking out. Take the buy, and you're just watching it from each structure, how it's reacting, okay? So, for example, just by looking at this, the reason why it's coming to correct here is because it broke structure here, okay? So there was no retest. So again, minor structures are good too, in the sense of like, if you miss that initial buy, you can get on the retest, but you always have to measure like how many pips it's going to be to the target, which this is a lot in this example. Okay, but if it's like 50 pips, you want to wait until it gets to that specific structure. You don't want to just enter in the middle of nowhere. That is the biggest thing. So this is something you can take advantage of with these false breakouts. So like I said, if you end up missing this sell and you see that a false breakout is happening and it closes above price, there's your buy signal. Same with here, if we're coming up to major resistance and you can see that there was a huge impulse and you see this fake breakout happening and it closes below this resistance level, below that specific price, then you can take this out. Okay, so I hope that made sense. But again, just go back test whatever pairs that you want to trade and go identify different things. So identify support and resistance, identify pin bars, identify just like reactions at each zone. And fake outs are really good too in regards to entering a trade, especially at these specific levels. So if that didn't make sense, let me know. But again, it's just more experience with the markets. When I first started, there was no freaking way I could identify all of this because there's so much to learn. So back testing is the 1000% key. Like you need to back test. So like I said, go through a list of things you want to back test. So support and resistance, get familiar with that. Get familiar with manipulation. Get familiar with major key zones, stuff like that. Get familiar with the patterns, so the W's, the double tops, stuff like that. And you'll be on your way and you'll be good to go. So